Hello, hello, hello. Hope everyone's having a good weekend. Today's going to make a video on just my interpretation of price movement rationale and how they interact between sessions. So this is something that when the market's moving, there's a lot of manipulation between sessions, and we're going to get like pullbacks at different times. So observing and understanding how a market will move in a day-to-day basis on your chosen pair between sessions is going to be quite important to because what you're going to understand is you're going to start to recognize that there's some patterns at play. So what I'm going to do is I've got a few slides I'm going to bring up, and we need to understand like how the market is manipulated and how we can take advantage of it and what signs they leave behind. So let me just bring up the first slide. So this is, I'm just going to read it out. It's going to be a little bit boring, but when we're looking at price movement from session to session, we really need to understand that the market is manipulated at various times of days. Generally, these are going to be around the market open or when there's scheduled high impact news. And what that's going to do is like when you do see a news event for the day, that's generally going to be the story of the day, and especially like these big ones, ones that move all the currencies. So take, for example, the FOMC for the federal bank interest rates, news around CPI and inflation, all of these things, they're really going to move the markets. And the main move will be happening around the time of that announcement. But once that announcement is out, we can't forget that there are two other markets at play. We've got with the three markets we have, the main ones, we've got the Asian session, we've got the London session, and we've got the New York session. So sometimes these news are going to be announced and the market's going to affect the market. The market that the news comes out is going to absorb that news. And then depending on what happens in the prior session or even after that session, when the next session comes in play, then they're also going to absorb that news and then see where the market is, and they'll make their counts and they'll trade accordingly to how it is. Okay, so what an example of that is when we do get that news, and that's going to be the interest generator, and that's going to move the market in a particular way. An example is when the US market, we know the US market opens at 8 a.m. New York time, Eastern Standard Time, and there's going to be manipulation for that first part of the hour. That's going to die down towards the end of the hour. So we know that where you can get fake outs, you can get breakouts, you can get things happening around between like 8 a.m. and 9 a.m. for that hour. And that's when the manipulation generally, not always, but generally is quite heavy. Then we're going to have a next batch, the next open, and that's going to be the NYSE open, the New York Stock Exchange. That's going to happen at 9:30 a.m. Eastern. Okay, so that can generate some trades, but sometimes these trades that you get into around this time, it's a little bit difficult to hold on to them for too long to follow through because you're gonna get pullbacks. So the much cleaner moves generally they happen after all that manipulations died down. That's going to be around 10 o'clock Eastern time, 11 a.m. even. So, and then once that manipulation settles down, then the true move usually becomes more evident. Now, depending on when you're trading from, if you're trading from, say, Australia, that's going to be quite late in your day, but you're going to start to see these kind of patterns play out for like when the London Open opens as well, and the Euro Open. But learning to anticipate these moves, you're going to see them. In my opinion, you see them more easily on a lower time frame chart. Okay, so let's keep in mind that the manipulation that's present is going to be different levels of volume. So Asian session, they don't have a lot of volume. It's a much smaller market than the Northern Hemisphere. Like it's not the Northern Hemisphere. They're a smaller market than the European markets and the American markets. So and then in turn, like the US volume, that's the biggest one. European market's a bit smaller than the US, and then Asian's considerably smaller than the European one. Okay, but if you're looking for types of moves in the Asian session, for example, then go in with a pair that it moves more, like New Zealand yen. You're going to see that move a lot more in the Asian session, generally, and not as much in the Euro or UK session, because it's just where the volume is located for the local market. But regardless of manipulation, price will have targets for each time frame. Okay, so a daily and weekly candle can only go so far. Generally, can only go so far. And it will have its own target, just like a session will have a target, like say if you're trading in, like for me, I trade gold a lot, and I know in gold generally you can see in the American US session, usually you can see like in the current state of volatility, you can see like a 200 pip move. So where could that, or even up to 500 pip move for like really extreme days. So I can start to try to analyze and look at it and say, where's my session target? Each session is going to have a different target, and each time frame will also have a different target. Like there's only so far a 1 hour candle can go, then a weekly candle can go. All right. So be aware of those things. Sometimes when a target isn't reached, it's going to result in a move, and it's going to create pullbacks. We're going to get pullbacks. We're going to get expansions. We're going to get consolidations. If we can take some of that noise out, I know lower time frames can be noisy, but if we can start to say and just understand what's the psychology behind the way a market moves, then we can start to anticipate when there's going to be a pullback, when there's going to be an expansion, and generally that can be quite consistent. Like if you look at a week's chart, you can generally say a move will happen, say 3 or 4 times a week, that you get like for example, if I'm looking at trading gold, very often gold will move so far in the London Open, and then towards the end of that London Open session, when you're getting closer to the pre-New York market, you'll usually get like a 50% pullback. I'm going to explain on the next chart with a chart, and I'll give you like some examples of that. But take the price out of when you're looking at a chart. Let's just use a scale, okay? Just use a scale, and you got on the left-hand side or right-hand side, you're going to have an axis of, instead of having like price being say let's use Euro US for example. You're going to have the price, and you can say price can be 1, okay, down here. And then you've got 1.01, which is 100 pips, 1.02, which is going to be 200 pips. Forget pips. What you're going to do is you're going to look at and say, I'm going to have a scale of just 1 to 10. And so 1 to 10, and you're going to have between 1 being structure 1 and 2 being structure 2. Okay, let's just say like on the higher time frame, I can go from my support, and I'm looking at going to my resistance. And I can say, all right, if I bounce off support, and I'm going to call that 0 to 1, and then my final target be 10. How do I think this is going to play out during the day? Okay, so what we want to look at, we want to say what's the story of the day? Do we have a bullish bias? Do we have a bearish bias? If I'm bullish, I'm thinking that we can continue, and I've got a bullish bias. Then if this is gold, or if this is pound yen or New Zealand yen, what news is there today? Is there going to be interest rate news? Is there going to be employment news? That I know that the bulk of the move to get me from 1 to 10 is going to probably happen around that news, or that news is going to assist the move up. So how is it also going to play from session to session? Okay, so before the news, what we're going to do is what we can see is that there's probably going to be lots of general little moves. Like we're going to be able to push up, we'll pull back a little bit, we'll push up, we'll have a deeper pullback. And you could just play these little scalps through the day, lead into that time of day that you know you're going to get the bigger move. But if we're going to play that market, we can say, look, I'll just wait until the news and trade after the news, or I can just trade with the news, or I can trade before the news. What happens with price before that time? I'm going to flick over to the next chart. This is an example of how it would happen. Okay, so see on the right hand side here, we've got 1, and we've got a 10 up the top. If we've got a bullish bias, you can see that the previous day or the previous session was very bullish, or just bullish in nature. We've got a daily candle that closes. When that daily candle closes, generally the way it pulls back is most cookie cut courses are going to be saying, oh, there's resistance here now. So we might have like bearish candles forming here. If we looked far to the left, this might be a sensitive zone, and there's a reason that the daily candle closed there, because there's only so far a daily candle can generally go. Now, say this is the Asian session. Generally, what I color code on my charts is I've got this as a light blue. But this will be my Asian session. And say I'm trading gold, for example. I know that the price is not really going to move that much during my Asian session. So when the market opens, we're going to probably get a little bit of volatility as soon as it opens, because it's going to be a bit of low movement, high spreads, just market sort of being quite volatile. Price might push up, and often because there's a lack of volume at this time, I'm not expecting breakouts, but what we might do is we might bounce off the previous daily or previous New York session high. We might bounce off that a couple times, and price is sort of sticking around this like 5 level. Then when we get towards the middle of Asian session, maybe they're gonna pull back a bit, because what they don't really want to be at this 5. They want to get a bit of price because the previous session's news was so bullish and price pushed up. And now, do you really want to buy the high? You don't generally. The market won't want to buy the high. So what they're thinking is that they'll probably try push price and drive it back to like maybe a 4. Or if there's going to be a bit more volume in that session, they might bring it back to a 3, so that they can sell down to a 3, just so they can get a better price to bring price back up to the 5. Then the Euro market's going to join. The Euro market's going to come in. They're going to say like, hey, like, I want to get a better price too. So I don't want to have to drive price up. I don't want to have to buy price right now. But what they'll often do is they might break the Asian high. So what we've created in this Asian session is a high and a low. And then price can come up here, and you'll often see it just break the high a little bit. Maybe we're forming a bit of a support, we're pushing up. They break the high, and then they pull back on you. And it might not, depending on the size of the session, it might just go from a 5 back down to a 4, and then it'll form a support, and then you'll see it break the Asian high, and it'll push up to say a 7. And they really want to get to a 10, but they know they haven't got enough volume to get there to a 10 right now. So they'll drive price up. They'll break the high. Usually the second attempt of breaking the Asian high, then you'll get that little breakout, and then price will start to consolidate towards the end of this like late London open. This can be quite a decent move here. Like if you're trading, say, in UK time between 10:30 to midday UK time, one of the often plays that I'll see is that I'll draw, or not going to draw, but like I'll measure from the low of the London session to the high of the London session, and I'll get like a 50% mark. And I haven't illustrated it on here so well, but what I'll often get is I'll get a pullback from the highs back down to the 50% of London range, and then New York volume can either bring it down a little bit lower, or they'll start to push it back up to the UK high. Okay, so then when we get into the New York session, it's going to have its own batch of manipulation. So what they're going to do is they're going to push price up, and you often will see an immediate break of a London high or a London low. And then price will push up, looks like it's going to do a breakout, and then you'll see a much deeper pullback, because the New York market, what they're thinking is like, when we closed the previous day, we left price here, and now price is all the way up at a 8, and we don't want to trade at an 8. So what we're going to do is we'll break up, and then we'll pull back down to say like a 4 or a 3. Sometimes they can take out the Asian low as well. And then we know there's going to be a lot of liquidity sitting underneath these points, underneath the Asian low. There'll be a lot of liquidity sitting under London low. And what the New York session can do is they can break the high, drive down, take the low of a London session, form a support, and now they've got a really good price. And now they can say, look, we've achieved our goal. We've got the best price possible. And now we can buy back up, and we'll get to our 10, our target. And that would be pretty typical. You're going to have a New York Stock Exchange here. So what you'll get 2 batches of manipulation where price can push up, break high, think you're going up, and then it'll pull back. Then New York Stock Exchange will open. It'll break the low, and then people will be thinking, oh, well, if we broke up the high and then it rejected, now I've got a fake out. Now there's a good chance that we're going to continue going down. And then what happens is that you get people buying too early, you get people selling too early, and after that 10 o'clock, after that manipulation around New York Stock Exchange, then the true move becomes more evident, and that's when they actually just wanted to buy the whole day. But you're going to have these different batches of manipulation, at each market open. And ultimately, you'll just see, you'll by the end of the day, you're exhausted because you thought you were buying, you thought you were selling. And at the end of the day, when you look at the chart, you're like, oh, it's so simple, it was just pull back to support and then keep on going with the trend. But we don't act like that during the day because we sit there watching it and then we get manipulated. So understanding how the market moves on a day-to-day, once you can actually start to anticipate these moves and these patterns, understand the rationale behind it, actually becomes a lot more simple. You start to get more prepared when to wait for pullbacks and when you know that you can expect a breakout. I'm going to give you it's going to be a bit of a perfect example because it's going to be already pre-prepared. But let's take New Zealand yen, for example. And then what we'll do is we'll just look at one chart quickly. I want to keep these videos fairly short. And so if we look at this move, okay, so we've got, this is the previous session, this pink bit, this is the London session. And then you can see that New York just drove price lower. Okay, so drove price quite low. We know that the trend was down. In this case, very strong move. At the end, when this like olive green color ends, this is London close, and then we've just got New York. You can see the size of the candles, much bigger during the New York session because it's the highest volume session. And then when we get to this lighter green color, you can see the size of the candles. So this is around 4 p.m. UK time, or 11 a.m. American time. You can see the candles they just really die off. They get smaller, a lot less volume because the pair is New Zealand yen. Now, when we get to the Asian session, what are they going to do? Do they really want to sell the low? No, of course not. Like, they don't want to sell the low of the day. What they're going to do is, sometimes this is not that much manipulation here, but often what they'll do is they want to pull price back up. You can see here, they say that when every day starts at like roughly a 5, like in the middle, we're going to have a little bit of a pullback. We'll pull back to like maybe a previous resistance or a key level. So this will be like this one here, what happened to be a higher time frame horizontal level. We had late N1 news, GDP and Treasury news, and that's why there was a lot of volatility in this New York session. And now we've got the Asian session that has to absorb that news. So Asian session pulls back a little bit. We started at like a 3 now. Price pulls back. We get to a 2 to 3. There's a typo here. That should be a 5, and we pull back to a 2 to 3. Then we get the Euro news will come in. Euro news drives price down because whatever happened in GDP and the Treasury news was obviously very it was bearish for Aussie and like New Zealand, and it was strong for yen. This Euro open, as soon as it opens, they absorb the news and they pull price down. Price has a little recovery, pushes down, and then the UK news comes online, and they absorb the news. So they push price down. Looks like it's going to break and keep on going lower, but then they have a pullback. It's very often that when you get this breakout, you'll get a pullback. So you don't always need to trade the breakout. You can say like, well, given the structure of the market, you can be waiting for the pullback. Now there's price action here. I'm not going to go into the price action little candles and which one are volume candles, which ones are order blocks, which one's a liquidity. I'm not going to go into that, but understanding like how price pushed down, came back up a little bit. Euro market open, had a little breakout and a little pullback. UK market had a little breakout, had a little pullback. US market came in. And if they had a session target from the US, as soon as the market opens, they're gonna not want to sell immediately either. So what they're gonna do is they're gonna pull price back. Price pulls back to like I say a 7 out of 10, and then they push down into the key support area, and then you'll just see price sort of muck around a little bit. We don't expect too much volatility in this session with a New Zealand yen pair, because you can see like New Zealand and yen, that most of the volatility generally will happen in the Asian session. But I think it's a good example of just watching the structure of the market play out. Now, keep in mind this chart. It's not always the same. You're going to have different variations of different days, but generally this is quite a typical quite a typical chart. Sometimes you get a bit of a deeper pullback on that leg, but quite often when you see, as soon as you get a market open, you have a little breakout and a pullback. And then sometimes the second break is the one that actually gives you the better breakout opportunity. Let me go to my charts. And let's just look at the last couple of days. This is just pound yen. I'll just bring up the session. So it's going to be something similar. The blue's the Asian session, the yellow's the Euro session, pink is the London, and then the green is the New York session. So I can't recall if there was any news on the Thursday for pound yen, but looking at this chart here, quite typical movement. You're going to see Asian session. Because we've got yen in here, we can get little breakouts. Breaks out, has a pullback, comes down, comes up, comes down, forms a bit of a support. Got a liquidity candle here. So this is a liquidity grab. Halfway of that wick is generally a good place to be looking for the pullback. Euro session doesn't really do much. It forms a support. So if we're forming a support in Euro session, then quite often London session, you can see that will break the Euro high, and then we'll have that little pullback, and then it goes with that direction. So if we've got supports forming in Euro session, generally look for the pullback, go long with London Open. London Open breaks the Asian high, and then we get a typical pullback. Then price sort of comes up, we form resistances, we're starting to form lower highs. So leading into the American session, quite often now, if they want to go and buy, and we've got resistances formed, what they can do is they can look to they'll go short first, because it's kind of, they'll go kind of counter to what you expect. Price pushes down, takes out the Euro low, takes out the Asian low, and there's a lot of liquidity sitting here, forms a support, takes that liquidity, you think that maybe prices break into the downside, but then they have a pullback, and they go long. In the end, it was a pretty quiet session in general, that it didn't really do a lot. Most of it just ranged, but you'll see how there's like manipulation of previous session highs and lows. Let's go back one more day. And let's look at a day like this. Okay, so Asian session. Session was trending down. And we get to a low of the day. Price pulls back a little bit. Euro session. Creating like, we've got some bullishness. We've got some support. Another resistance candle, then a little support candle. And we're getting to this danger area that where you can see this here. We've got a liquidity grab candle. That candle there is primed to be retested and have reactions off. So if we're looking at this particular candle, you're going to have a lot of time. You're going to get reactions in this wick, especially the 50% of this wick. So you see price really struggling to close above it. If we can close above that wick, then you'd think that we can start to break that wick and then maybe go to some higher time frame targets over to the left. But we're not breaking the 50% of that wick. What we're doing is we're creating a resistance candle, support candle, and then we do a liquidity grab, wick up higher than these ones, and close strong bearish. That should give you a strong indication of where to go with the volume. That's the London volume is taking a sell play, and it's pushing down. If you measured getting close to this end of this London session, quite a typical move would be, like before we get into this green section, if you measured the high to the current low where price was, you can very often will get a pullback to that London 50% and then drive down lower for the New York session. Okay, so that if you miss the move, you don't have to trade the London Open. You don't even have to trade like this mid bit, but knowing that there can be quite just the rationale between price movement. If you get into this end of this London Open period, we can quite often get that pullback as a counter trend opportunity, and then retest the low again. Then you see American session. What it does is you think everything's going down. They manipulate the low of the London session, pick up this liquidity that was sitting underneath the London low. And what it does is it uses it to drive back up. Now, if we look to the left, could we anticipate that maybe that was a target by doing the exact same thing as we looked at on this liquidity grab, you got the same candle over here. So you could use it as a target and say, well, it makes sense to make it look like we're going down. Take out the London low into this support candle, into this wick, this liquidity grab, trap, induce early sellers, and then take the market long. And that will be like, it's so typical. And if you can start to think logically and clearly about what is the most likely scenario, are we going to sell the low of the day? No, I doubt it. What they'll do is make it look like they're going to sell the low, but then they're actually going to move the market in the opposite direction. So in this case, like if the American session ended their day up here, and by the course of the day, price pushed down in Asian session, pulled back in Euro, pushed down heavily in London session. American session, are they just going to keep on pushing down lower? Unless if there's a news event or something heavy, yeah, maybe they will. But in a fairly quiet week, when there's not much news, that they're not usually going to push it down. There's no fundamental driver to make price leave this area and keep on going down. So as price had already got to the lows of the day, makes sense that there's more chance of manipulation and for American session to bring price back just where they left it. Just where they left it. And if we can piece together a story like that, that's going to help you a lot with your trading. You're really going to have to start becoming an expert in your trading session. Really understand what time of day you're trading, what asset you're going to be trading, when the bigger move happens, when the bigger candles generally happen, and start understanding how market manipulates previous session highs. So Euro session, London session manipulated the high and then drove down lower. American session manipulated the low and then drove higher. I'm going to do a video on Asian session. That's not going to be in the catalog just yet. Maybe the time you watch this it will be. But understanding that manipulation at different times of the market and how they play with each other is going to be crucial. Basically, in my opinion, it's going to be crucial if you're a day trader. So I'm going to leave it at that. I'm going to wrap this up. Appreciate you guys for watching, and I'll see you next time.